I added one simple trick to my trading that changed it forever. I instantly saw my win rate increase and my trades become more profitable because I was able to look at the charts like a professional trader. It got rid of noise, confusing signals, and simplified how I enter every single trade. In this video, I will teach you how to identify the best entry on the charts using order blocks. If you've watched ICT or SMC videos before, you know they're confusing and long. So today, I will simplify the concept of order blocks and then show you real examples in combination with the break and retest strategy so you can add this technique in your own trading and become profitable. So how can we increase our win rate using a simple trick with order blocks? Well, first we have to define what an order block is. An order block is where the most liquidity is on a chart. This is where institutions and banks are entering potential trades. Now, I want to emphasize, institutions and banks are not entering off of order blocks. I don't want to misbetray this concept. However, they are entering where the most liquidity is. For us, order blocks will help us define and identify where the most liquidity is so we can enter into the trade similar to how big banks and institutions are entering to make our entries much more higher probability. So in this example here, we can see that we have a nice move to the upside. We have some consolidation. We drop down. We break back above this previous high. And then on this retest, we would have entered this trade using this order block for a move to the upside. Now, I'm going to talk about step by step how to draw and identify order blocks. But before we get to that, we need to understand the importance of order blocks. So if you combine order blocks with any strategy, no matter what you trade, the probability of the trade working in your favor will increase, and therefore this will increase your win rate as a trader. And this happens because you can combine key levels with order blocks to have multiple confluences to enter the trade. In this example here, we can see that this order block was also aligning with the first 5-minute opening range strategy. I have a full in-depth video on my channel going through the 5-minute opening range strategy. However, here you can see 1, 2, 3, 4, 5 minutes. You mark out the high of the first 5-minute candle. And as we can see, when we come back for the retest, not only are we entering in off the order block, but we're also entering in off of the first 5-minute range retest. So it's important for you to understand that you can add order blocks into your toolbox as a trader to help you get a little bit more confidence and confluence for when you enter a trade. Now, there's two different types of order blocks. There's bullish order blocks and then bearish order blocks. First, we'll talk about how to draw bullish order blocks. To draw a bullish order block, first, you must identify a bullish trend. In this example here, we can see that we actually had a high right here. The stock broke out of the high, and now we're coming back down. We're holding this previous high and we're moving back to the upside. So we have a clear higher low being placed after this low right here. And then we also have this high right here and a higher high. Therefore, we know that this stock is in an uptrend. Now, the second step is to mark the last down close candle in an uptrend. So to do this, in this example here, we can see when we move to the upside, when we came back down, the last down close candle we had before moving to the upside was this one right here. And if we're looking for a potential entry, when we move to the upside, we also know that this high will be used as a pivot level. So therefore, what we would want the stock to do now is break out and then retest back into this order block, which is simply drawn from this last down close candle in an uptrend. And then finally, for step number 3, we wait for strong price action to enter. In this example here, we can see the stock did end up breaking out. We came back for the retest. We got a very strong bullish candle right here. We would have entered into the trade, risking the bottom of the order block and our profit targets being at least a 2R multiple. If you don't understand risk management, I made a full video on risk management last week that you can check out after this video. However, we would need at least a 2R multiple, meaning if we're risking $100 for this order block to break, we would need to make at least $200. And as we can see, this trade moved up extremely nicely. So this is how to draw bullish order blocks, but to draw bearish order blocks, it is the exact opposite. So number one, we identify a bearish trend. In this example here, we have a low right here and we have a high right here. As we can see, we created a brand new low and we created a brand new lower high. So this high was obviously much lower than the previous high, and then this low was much lower than the previous low. Therefore, this is a clear indication that this stock is indeed moving to the downside. So now that we identified the bearish trend, the second step is to mark the last up close candle in a downtrend. So in this example here, as we can see, this is a bullish candle in the downtrend. This is a green candle showing that buyers are stepping in near this level, and therefore in the downtrend, this is what our order block would be. Now what we're waiting for is the stock to break below that previous low, come back for the retest into this previous pivot level and order block, and then we're simply looking for new low of day and continuation. And finally, for step 3, we wait for weak price action to enter. In this example here, we can see the stock broke to low of day. We came back for the retest. We had a very weak price action candle here. Once again, if you don't understand how to read price action, I have a full in-depth video for that as well. But as we can see, once we retrace into that order block, we enter into the trade there with the 2R multiple, and this trade once again made a very nice low of day move. So now that I talked about how to draw order blocks, one of the biggest questions I get is, should we draw order blocks using the wick of the candle or the full candle itself? So on the left, I have a wick order block, and then on the right, I have a full candle order block. Here we can see this is a bullish example. We marked out the last down close candle in an uptrend, and we can see that we only marked out the wick. And in this retest, the trade only came down to the wick. We retested very quickly, and then we continued that move to the upside. Vice versa, we have a bearish example here, and on this example here, we can see I marked the last full up close candle in the downtrend. And therefore, I didn't just mark out the wick, and this trade actually ended up coming to the top of this order block and then moving to the downside. So when you're drawing these order blocks, how should you know if you should draw on the wick or should you draw the full candle itself? Well, to answer this question and to make sure you really understand how to use an order block and implement it into your own strategies, I'm going to show real trading examples using order blocks. So by the end of the video, you'll be able to understand order blocks like a professional trader, and you will have an answer to your question with proof. Okay, so here we are on our first example. This is on QQQ, and what I'm going to do is use a 5-minute opening range retest. If you don't understand how that strategy already works, I have multiple videos explaining that strategy, but what we're going to do is let the first 5 minutes play out, and then we'll look for a potential order block. So right here on QQQ, we can see that we have the first 5 minutes. Now for order blocks, like I said, what you want to mark out is going to be in an uptrend, the last down close candle. So for this order block here, what we're going to do is we're going to mark out the high and low of this previous down close candle. Now, as you know, the first 5-minute range strategy, you mark out the low of the first 5-minute range, and then you mark out the high of the first 5-minute range. With this order block, we have a little bit more confirmation that if the stock does break above the 5-minute range, we know that we're looking for the retest, and therefore with this retest, yes, the stock can dip a little bit more with this down close candle, and we can still look for a potential entry as long as we get strong price action. The good thing about order blocks, especially if you're a newer trader, is when you see a potential retest into a key level, you think that if the stock breaks the key level, it's absolutely invalidated. But the reality is, yes, the key level is important. However, you want to treat key levels as small zones. And with order blocks, this helps us visualize the trades much better because we have clear risk off levels. So with this being said, let's play out this trade and see what happens. As we can see here, what is happening? We broke out of the 5-minute range. We came back for the retest. We are currently getting a strong price action candle here showing that sellers came in, but buyers were able to bring the stock back above the 5-minute range. But at the same time, it dipped into the order block where the most liquidity is. Therefore, buyers were present. And this gives us a little bit more confirmation to enter this trade. Now, if I was entering into a long position on this trade, I would need at least a 2R multiple. However, where would I I put my stop loss? In this scenario here, we can put our stop loss simply at the break of the order block down here. And of course, we need at least a 2R multiple. 2R multiple actually comes near the 491 area. Therefore, we're going to move our profit target to the 491 area because that's a whole psychological number. And this is a 2.39 risk to reward trade, meaning if we're risking $100, we should make $239. Now, let's enter into a trade here and see exactly what happens. As we can see, we just hit that profit target, and at the same time we can see that this stock did actually end up coming back below this 5-minute range, and it closed a little bit below the 5-minute range. However, it was still able to hold this order block, therefore we never stopped out of the trade, and we were able to ride this trade up for a $1,590 gain. Now, like I was talking about, should we draw on the wick or the body? In this example here, if we move this order block to simply just the top wick right here, we can see that we still held this level. This order block never allowed these candles to close below the wick of this down close candle. All of these body candles closed above, and this is going to make sense too after we're done the examples. However, what I want you to understand is if the order block holds the wick, that is going to be the strongest order block. However, if it does have to retrace back into the full body candle, that means it's a little bit more weaker and buyers are not stepping up as aggressively as they should. This doesn't mean that the trade is invalidated. However, as momentum traders, you will just find a little bit more momentum if the trade only retraces back into the wick and moves up from there. Now, this will make more sense as we go through these examples, but let's go to the next example. Okay, here we are on the second example. On this example, we're going to be doing the exact same thing. We're going to let the first 5-minute range set up. After that sets up, we'll look for a potential order block, and then we'll look to either go long or short on the stock depending on which way it breaks. So right here, we can see we got the first 1, 2, 3, 4, 5 minutes. Now in this 5-minute range, we want to mark out the high and low of the first 5 minutes, and then we're going to mark out the order block. In this example here, this is pretty neutral so far. Therefore, for an order block to actually potentially work out, we're going to have to wait and see which way this stock wants to end up breaking. So let's mark out the first 5-minute range and then look for a potential retest. All right, so let's play the trade out. Okay, so we did end up breaking to the downside. Therefore, we're going to draw out the bearish order block. In this example here, using the 5-minute range, we're going to mark out the last up close candle on the first 5-minute range. This would be this 934 candle, and here we can draw out this full order block. Now, one of the main things for me whenever I draw out order blocks is for a little bit more precision and just to visualize the entry. However, I am not getting precision if my order block is this big because I can enter anywhere in this zone. Therefore, here is where we really have to understand the 5-minute range retest setup. If you don't understand the 5-minute range strategy, make sure to watch that after this video. However, if we understand the strategy, then we know what we're looking for is simply displacement and then the retest of the 5-minute low. For me, how could I use the order block to my advantage? Well, it's very simple. In this example here, similar to the last example like I talked about, the wick is going to be the most powerful order block. Therefore, what we're going to do is only draw the order block from the low of the body to the low of the candle. This is going to be the strongest order block, and it is the wick of the candle, not the full candle. Based off of my historical performance, I personally prefer to draw the order block on the wick because those are the most powerful. You can draw the full candle. However, I do believe that the wick is going to give you the best and most precise entry. If the trade retraces back into this full candle, with the context of this trade, it most likely will just be choppy and consolidate like it did previously over here. Therefore, for us, we can even use this order block as confirmation, but also as our stop loss. We're going to have our stop loss simply at the break of this order block. And this way, if the stock does come back into this previous 5-minute range, we know it's a little bit more consolidation and we do not want to stay in this trade. So let's play the trade out and see if we get a potential retest entry. And right here, we just got the retest entry with a weak price action candle. So what we're going to do here is go short on this position. Our stop loss can simply be a break of that order block, and our profit target, like I said, needs to be at least a 2R multiple. In this example here, it's the 230.70 level, which is a previous day level. So let's enter into a short position here and see exactly what happens. And just like that, based off of this bearish order block, we were able to enter in off the 5-minute retest for a really nice move to the downside, and this resulted in a $980 gain. So for the first example, I showed you a bullish order block, and for the second example, I showed you a bearish order block. But I want to make sure that you really understand this concept, so let's look at one final example. All right, so this is going to be the final example. To make sure you understand this concept, we're going to first open up for the first 5-minute range. Once the first 5-minute range has been established, we're then going to mark out the low and the high of the first 5-minute range. Now we want to see which way it'll break. And in this example here, we can see the break to the upside. So you've watched the video up to this point. I want to ask you, which candle should we draw the order block on? Before continuing the video, make sure to lock in your answer in the comments down below. But the answer to that question, because we're looking at the 5-minute range, is going to be this 932 candle. Now, even if you said this 935 candle, you're not really that off, because if we mark out the wick of the 932 candle and we mark out the body of the 935 candle, both of these give us a strong confirmation that this is going to be our order block. Now, realistically, should the order block be this whole red candle? Technically, yes, this is the full order block. However, like I said, this is just too big for myself. I much rather mark out the wick in this case. And then also this has a confluence and another confirmation with this 935 candle. So what we want now is a stock to retest back into the 5-minute range, but at the same time, we would like to see a wick into the order block, and then we're looking for a move to the upside. So let's play out the trade and see what happens. And right here, what just happened? Well, we had a nice move to the upside. We're coming back for the retest, and on this retest, we're holding both the 5-minute range high, but then also we're holding this order block. So this order block simply just gives us a little bit more confirmation that buyers are stepping in combination with the 5-minute retest. We can look for a long position here. Our stop loss in this scenario can simply be a break below this 935 down close candle, and our profit target needs to be at least a 2R multiple. In this scenario, the 2R multiple is a little bit above high of day. So let's enter into a long position here and see exactly what happens. One thing I want to mention here as well, we can see that the stock actually ended up coming back down, and this body candle came below this previous order block. And the reason I want to show you this example is because yes, this is a high probability A+ setup of an order block plus the 5-minute range retest. However, we still came below the wick of the down close candle or the order block that we drew. Therefore, it is very important to mention, and the reason I'm showing this example is you still have to understand market structure when you're trading this example. When you understand market structure and you understand price action, I have full in-depth videos of that as well. Then this order block confirmation will increase your win rate, because as we know, we still have our stop loss at the break of this previous down close candle. We should have not stopped out of this trade. We are still in this trade. This is simply just a pullback. So let's keep playing out this trade and see what happens. And just like that, we can see we made a really nice move to the upside. We were able to enter the trade using the 5-minute range retest and the confirmation of the order block, and we were able to manage the trade using market structure. And as we can see, this trade made $1,780. So if you got value from this video, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to follow me on Instagram and Twitter for more education, and I will see you guys next week with a brand new video.